All right, so you were kind of laughing when we were looking at it's 50-50. I mean, what do you think? What are we getting, 50, 25? And does that really matter? Is it the cycle? Is it the size of the cut? How are you seeing it?
I think they were a little behind the curve. They wanted to catch up. They did a jumbo cut to start, but the messaging, the presser was kind of hawkish. The dots are not really matching up with another series of 50s or etc. He literally said 50 is not the new normal. So right. I think unless economic activity slows down significantly, we would see a 25.
So just walk me through this. We got the records at highs. We just talked about the S&P and the Dow at highs. We're seeing tech outperforming once again.
Yeah.
We're seeing kind of the setup that we saw in the beginning of the year. It's very similar to that. Is that good?
It is good. The economy is strong. Oil prices are lower. Rates are going down. This is as good as it gets for equity.
But doesn't that mean that we can only have volatility? Doesn't that mean we can only have a pullback? I mean, if you're somebody who's an equity investor, do you want to get into the market right now? Or we always talk about the cash on the sidelines. Isn't this kind of the time to stay on the sidelines because there has to be volatility? There has to be a pullback almost?
So equities have positive ROE. They will compound. The question really is are they too rich? I don't think they're too expensive. S&P equal weight is not expensive. European and Japanese equities are not expensive. Global equities are not expensive. And then the big cap tech, which is it's a concentrated index. They're Microsoft and Amazon and others. I think the investment they're doing in AI will pay off, which is the big debate in the market. I think you're on the right side of the debate if you own these companies.
Okay. We spent a lot of time talking about the equity market. I want to talk to you about bonds. I know that's not your wheelhouse, but how do you view bond investing right now? When we're talking about portfolios, what percentage should be in bonds? We've seen yields climb a bit since the rate cut, and of course, you have PCE coming up. Mostly on the long end, we've seen yields climb.
I think outside U.S. bonds look relatively good because of the deflation coming out of China, oil going down, inflationary pressures easing. In U.S. going forward, fiscal trajectory remains very high. Bonds have had a big rally. Both the Democrats and Republicans have fiscal expansionary agendas coming through, and whether those will be implemented or not, depending on control of the legislature. But so U.S. is a bit more tricky here because of fiscal bias. But overall, I still think bonds are going to be good to own because inflation is receding because of the deflationary impulse from China.
Very quick, because I want to move on to China. I know you have a lot to say about China. When we're talking about fixed income, are we talking corporate bonds? Are you talking about treasuries? I mean, we're looking at credit spreads right now. What looks more attractive to you?
Treasuries. I think credit spreads are tight, but they're supposed to be tight at this stage of the cycle. I think I'm talking about treasuries. Yeah.
All right. Moving on to China, because I know this is what you're really excited to talk about. As soon as you walked out here before you got on camera, you're like, I want to talk about China. We saw the stimulus in China today. You and I were talking. It's not the bazooka. It's not that huge move. Eunice was saying the same thing. A lot of people are looking for more possible stimulus when it comes to China. How do you view Chinese equities right now? Is there one part of the Chinese market that looks attractive right now with the knowledge that we don't know what's going to happen next as far as stimulus?
So China is in a balance sheet recession, consumer confidence really low, and there's an oversupply in the property market, as everyone knows. So what they're trying to do is ease on the monetary front, which will alleviate pressures on consumer spending. But this is not going to do like fiscal spend, which is going to boost the whole overall economy. I think tech, which are very blown up, valuations are very low. Some of the best companies in tech, like Tencent or Pinduoduo, they're well positioned. We like Pinduoduo a lot. But I think overall, China does not see a big fiscal bazooka coming, and commodity demand will not rise on this.